Nirav. Good evening, everyone, and welcome and thank you for joining us on Everest Kanto Cylinder Q4 and FY2022 earnings conference call. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. We'll initiate the call with the opening remarks from the management, following which we'll have the forum open for question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect have been included in the presentation shared with you all earlier. I would now request Mr. Puneet Khurana to make his opening remarks. Thank you, and over to you, sir.
Thanks. Good evening, everyone, and thank you for joining us on our earnings call. I hope all of you had the opportunity to go through our results, documents that provided details of our operation and financial performance for the quarter and year ended 31st March 2020. We are delighted to share that we have registered a record performance during the year, delivering a robust top-line growth of 79%, EBITDA growth of 127%, and a PAT growth of 189%. Our India business has delivered strong growth drivers by expanding CNG ecosystem that is driving circular demand. As some of you are aware, leading gas infra companies are aggressively establishing CNG pumps across the country and backed by this expansion. Auto OEMs are expanding their CNG portfolio to tap the demand from end consumers. On a standalone basis, our revenue expanded by 69% to 1,268 crores in FY2022. Our overseas operations have also delivered a sustainable turnaround during the year, led by the global shift towards gas adoption. Our consolidated basis revenue stood at rupees 1,699 crores, higher by 79% in FY22. While the overseas performance during Q4 was impacted, if you look at it from a year perspective, the subsidiaries have contributed positively to our results as compared to previous years. So we believe our overseas businesses can continue to contribute positively to our performance going forward as well. Accordingly, looking at the demand from the high potential Egypt and African market, we are happy to share EKC wholly subsidiary EKC International has formed a joint venture in Egypt to establish CNG cylinder production facility. With our UAE facility operating at a healthy level, we believe this facility should help us target the growing CNG opportunity due to the region's push forward the consumption of cleaner fuels. On margin front, we have witnessed volatility on QoQ basis during the year, owing to the change in product mix and increase in overall costs. It is difficult to comment on margin performance on quarterly basis. However, we anticipate our sustainable EBITDA margin shall be in the range of 20 to 24% on a full year basis. On standalone basis, FY22 EBITDA was higher by 93% to rupees 351 crores, with a margin at 28%. PAT was at 122% to rupees 228 crores. And on a consolidated basis, EBITDA stood at 392 crores, higher by 127% with a margin at 23% PAT. Margin 23%. PAT stood at 265 crores, higher than by 189%. Over the past few years, we have notably strengthened our balance sheet as well as prudently deployed capital on our capacity expansion. This has enabled us to generate healthy free cash flow during the year. Accordingly, in line with our dividend policy, the board of directors has recommended a dividend of rupees 0.70 per share. Coming to our capacity expansion plan, during the year we expected our annual production capacity to over 1 million cylinders on the back of our brownfield expansion in India. The second phase is also on track to be commissioned by second quarter FY23. This will add about 1 lakh cylinder capacity and should assist us to drive further growth in this year. In addition to our greenfield expansion in Mundra is progressing well, and we remain on track on commissioning the facility by FY24. The initial phase of this project will increase our production by 2 lakhs annually. To conclude, India has made a structural shift towards building a cleaner gas-based economy with a huge thrust on developing the CNG infrastructure. In addition, Indian government recently announced its National Green Hydrogen Policy with the goal of meeting climate change and making India a green hydrogen hub. As per our studies, India hydrogen demand is expected to increase fivefold to 28 metric tons by 2050 to 6 million metric tons by 2020. Overall, this showcased over the next few years, the decades, the use for gas across industries, including transportation, only going to accelerate. This would be a huge opportunity to the entire gas and cylinder industry. And given EKC leadership position, we believe we are well positioned to tap the opportunity and create substantial value for stakeholders in the future. On that note, I come to an end to my opening remarks and would request the moderator to open the forum and any operational and strategic-led questions that you would have. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you very much to give so fantastic result in this year and quarter. Sir, my question is, what is our order book at present, and from which sector we are having these orders?
So I think the order book is quite strong, and mainly CNG is the segment where the order book is coming from.
Okay. Can you give in numbers? How much order position we are having?
Maybe about 350 to 400 crores.
350 to 400 crore. And how much more volume we produce? What is capacity utilization on quarter 4?
And utilization, I think, should be around 90%.
Oh, very nice, very nice. And our ROC will be same in current year also?
Yeah, it should improve, I think.
Oh, it will improve, sir.
Yeah,
and
sure.
Sir, US and UAE is not giving so much margin in compared to India. Why we are expanding there and want to continue this project?
See, definitely there is this year has been quite good compared to previous years in US and UAE. And going forward, we are behind COVID. So I think COVID is behind us, and I think we should be, the performances should be much stronger going forward. And there is a, growth in the international market for CNG is also growing quite fast as, CNG becomes more and more popular around the world with crude fuel prices going up, plus green fuel as a large push from all over the world. So I think this is the right time for us to, look at these opportunities which are coming up. And I think, it should be quite fruitful in the coming years, these expansions that we are planning to do.
Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Bhavesh Sean from IDBI Capital. Please go ahead.
Sir, can you throw some light on any guidance for FY23 in terms of sales growth?
It's there in the opening remarks. I think we've already given some.
I missed it, I think.
Okay. I think. So you want guidance on what? On the volume or what did you looking for?
So volume would be more helpful.
Volume, okay. So like we said, we have a 10 to 15%.
Okay, and in terms of margin, will sustain the current levels, or are we looking at?
I think like 20 to 24% is something that we believe that this is something that is achievable and doable and sustainable.
Yeah. So and so on product mix, how do you see that going forward from here?
So I think it should be around maybe 60-40. Maybe CNG will become 60% because CNG seems to be growing quite well, and industrial will be around 40%.
And sir, I believe on CNG we have higher margins, right?
I think the margins are quite similar, or maybe CNG a little bit higher, but margins, industrial also are quite decent.
Okay. Okay, sir. Thanks. I'll join back with you.
Thank you.
Thank you. Next question is from the line of Deepan Shankar from Trustline Portfolio Management Service. Please go ahead.
Thanks a lot for the opportunity and congratulations for good set of numbers.
Thank you.
So firstly, on the one side we are seeing these CNG prices are going up, and on the other side oil prices are expected to come down further. So the spread is continuously narrowing. So do we foresee the CNG conversions getting impacted during short to medium term?
Yeah, I think, now what's happening is that, with more and more infrastructure growing, definitely people are realizing that this is a fuel that is, it works, and it's giving benefits to the customer and the environment. So I think you're going to see more and more, push towards CNG. So I don't think there should be any, any much, growth should continue. I don't see any issue with growth, with CNG.
Okay. So what is the kind of price gap between now CNG and petrol? And
petrol is much higher.
Beyond what level do you see if this gap continues to narrow? At what level of spread will get impacted? CNG conversions will get impacted.
Even if the gap narrows or whatever happens, this business is completely dependent on infrastructure. As long as infrastructure keeps on growing, the customer base will also continue to grow with it. So even if the gap is narrow, it all depends, really, because the policy of the government to promote green fuels. So this is the best way to do it. So definitely I think today also there is a 25-30% gap between CNG and diesel. That's still encouraging people to convert. The benefit is still there. It's a better economic to run on CNG, and plus the infrastructure is getting built every day. So I think there's definitely it's quite encouraging for people to continue to. So you can say this is going to be something that CNG is going to be a business that's going to be there for a long time. As long as infrastructure is available. So it's going to become like any other fuel. That you go to fill a diesel vehicle or petrol vehicle, people are going to start filling CNG vehicles. So I think it is going to be something that's going to be there now.
Okay. And lastly, so in passenger vehicle, we understand that customer can switch between CNG and this gasoline oil. But so the similar kind of provision available for even these ICVs or LCV kind of vehicles?
No. They are completely dedicated.
Okay, so if it is a CNG vehicle, it will be purely on CNG?
Yes, only CNG.
Okay. Thanks a lot, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So I just wanted to understand, firstly, on the realization front. So what sort of price hike you would have taken over the last 1 year for our products on an average?
I don't have the numbers in front of me, but definitely, whenever the steel prices are going up, we're definitely approaching the customer. Now, I don't know how many times in the year the price have gone up of steel, so I don't have those numbers with me yet.
Total quantum, will it be in the range of 5 to 10% ASP increase, or maybe?
Very difficult to give any numbers. We will really I'll have to go into the details to see where, how the steel prices have behaved in the, over the year, and then. But definitely, steel prices have been going up, and sometimes they're stable, and sometimes they're going up. So it's very difficult to kind of give you a percentage that what has happened.
Okay.
But we do have those studies. I mean, we could I could dig it out and give it to you on offline maybe sometime if we have a discussion.
Sure, understood. And regarding the volume growth that you mentioned about 10 to 15%, right?
Right.
So we are already at maybe 90% capacity utilization, right, in the fourth quarter, and I think expansion is coming only in the second half of about 1 lakh. That is about 10% capacity increase. So basically only maybe 50,000 will be available in FY23. So incremental volume. So what will drive the incremental volume? Either our capacity utilization has to go back to 100% for the existing facility in FY23, right?
So, what will happen is definitely, wherever the opportunity of higher value products will be the one that will be focused once this capacity comes online.
Okay.
Yeah.
Okay, understood. Yeah, that's it from my side. Thank you very much.
Thank you. Thank you.
Thank you. The next question is from the line of Rajesh Agarwal from Money Over Capital. Please go ahead.
Hello, sir. Hello?
Yes.
My question is on, is there a threat from CNG cylinders being imported because after the COVID? Is there a threat of CNG cylinders
sorry
being imported?
to interrupt you, but your voice is breaking. I request you to come in a better reception area.
Hello?
Yeah. Please go ahead. Please go ahead.
Is there a threat of CNG cylinders getting imported?
Hey, the CNG cylinder might be imported, but again, nothing comes cheap nowadays.
Okay.
Imported
CNG cylinders are supposed to be 20% cheaper?
No, they're not cheaper than what we are selling. We are still, if we are selling against imported cylinder, definitely our product is preferred by the customer.
Okay, that way. So we are getting a better margin than the imported cylinders?
So we are getting a better margin. Plus, what happens is the customer also, like suppose an OEM and they would just, prefer to buy a product locally.
Okay.
Because, lots of different capacity sizes, lots of storage needs to be done, just in time. So this is definitely a preference that the customer doesn't need to, an OEM wouldn't like to import and, wait. If the product is available locally, yes, definitely there might be some gaps that might be filled in by imports, but on a long-term basis, definitely the local production will be, be the one that becomes preferential for the customer.
Caskets also can't be imported, no? Caskets
are totally, it becomes uneconomical to import those things.
Uneconomical?
Yeah.
Okay. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, thank you for this opportunity and congratulations on good numbers, sir.
Thank you, sir. Thank you.
My question relates to two things. One, if you can talk about your JV in Egypt, if you can give more detail about that. And what about the status of Hungary expansion which you are carrying on?
So, the JV in Hungary, so first thing is that, because of the current situation in Russia, we are just waiting and watching the situation to improve.
So the project execution is been halted for some time?
We just delayed it for some time, till this Russian situation doesn't become clear. So we don't want to, do anything unless, because again, Hungary is also a country that will depend on Russia for many things like gas and other things. So we want to, let the situation become a little more clarity till the time, we start, going ahead and making the large investment there.
So have we done any investment over there or no?
No, not yet.
Okay. And about JV in Egypt,
Egypt, what is happening in Egypt is Dubai is, selling a lot of cylinders to Egypt today. And Egypt CNG business is growing very, very fast. And, we are not able to cater this business from Dubai, and we feel that we need to have this manufacturing facilities in Egypt to cater to this large growing market. So I think that is the update we have, at this moment. And
still working on.
Yeah. So more the details. So this is very recent development that has happened. So we are just at JV signing stage right now. Yeah. So JV signing stage. Then the feasibility study will be done more in detail. Then then we will. So it's a period where I think another 2 years where we can see the project.
Be in place.
Yeah. 2 years.
Right.
Yeah. Yes.
Yeah. And so third question regarding how you see competition coming up from these composite cylinders which are now getting...
So, composite cylinders are definitely a complementary product to the industry. They are actually being catered to a segment that we are not in that segment. So it is not really a competition. Steel cylinders are catering to a different segment and composite cylinders are catering to a different segment. So it's really, they don't compete with each other as such. They are not competing with each other. They are filling a gap which is there in the market for a specific need for gas transportation. But steel cylinders still, contribute to 95% of, or maybe 98% of the CNG cylinders sold globally and in India also.
Okay. And so last question relating to US operation. If I see your segmental result, US again has dipped into these losses. So is there any one-off in that, or how you expect this business to move forward from here?
Year-end provision. So there's been some year-end provisions, but definitely, like COVID is behind us, so, definitely now, the business, US business should pick up. It's mainly, a lot of business that comes from defense and other things were delayed, but there has been definitely a pickup, and you'll see it. You will see the improvement will be there going forward.
Okay. Okay, sir. Thank you very much.
Thank you. Next question is from the line of Viraj M., individual investor. Please go ahead.
Hi, Puneet, Sanjeev. Congratulations on steady and inspiring results.
Thanks, Viraj. Thank you. How are you doing?
Questions. Very well. Thank you. A couple of questions from my end, Puneet, Sanjeev. In the last 1 or 2 quarters, we've seen compression in gross margins or contribution margins and EBITDA margins. So that's been dilutive to the overall FY22. I think a couple of quarters ago, you mentioned that, there's a lag in passing on RM price increases to the clients. And also, you all were looking to take price increases generally across some of your older clients. So has that already happened in Q3 and Q4? And can we expect margins to sort of trough out in what we've seen in Q4 and hopefully start improving from Q1, Q2 onwards?
So Viraj, the gross margins you're saying, right? The gross margins seem to be consistent, right? There's no...
No, actually, it's come down. Gross and EBITDA margins have come down slightly in Q3 and Q4.
Okay. They have? Okay.
So my simple question is, have we now passed on the RM price increases, and are we taking price increases which will start reflecting in improved profitability starting Q1?
Definitely, their price increases have been forwarded, on a continuous basis. So I think, we'll definitely see, that the prices get, we get the prices, the new prices from the customers.
That means if we've already taken price increases, then the RM increase is greater than the price increase we've taken because it's been dilutive on margins. So, not quite getting that, but maybe I can follow up separately with Sanjeev on that. Secondly, I think, Sanjeev, it would be really helpful to see somewhere on the deck, contribution margin per ton. Because, with this noise in passing on of RM at the revenue level and inflation at the, the COGS level, it's hard to see and compare quarter on quarter or year on year. I think contribution margin per ton would be a great metric if we could reflect it somewhere in the deck.
Yeah, we'll see that,
Yeah. My next question is, I'm glad you touched upon the hydrogen opportunity, Puneet. But, can you give us a sense, so CNG is here to stay for most of this decade by the sounds of it, right? With the build-out in infra, petrol pumps, switch from diesel to CNG. I mean, does hydrogen eat away at your market?
Definitely, these cylinders will definitely be a very integral part of the hydrogen story.
Right.
And there will be some changes in the products that we are doing today, and we are looking at that, but again, hydrogen is just, it's going to take some more time, because as the regulations come in and the real infrastructure comes in, it will take some time because the stakeholders all need to come together and regulatory framework. So it takes some time, but we'll definitely actually looking forward for this to happen, because there will be a lot of places that we'll be playing a role for hydrogen transportation, that we are already doing for industry, and of course for transportation for hydrogen stations also we'll be doing. So definitely we are looking for this opportunity. I think this is something that we are looking forward for it to come as soon as possible.
So effectively what you're saying is CNG is an opportunity for many years to come. Even if hydrogen comes, it's an opportunity
yes, of
for
course.
you.
Because cylinders will
not
be
a loss
required.
of market for
Yeah.
you.
So, in fact, it will become, even a larger opportunity because you got CNG and you got hydrogen. So, there are vehicles that are getting converted on CNG or, OEMs, and then there'll be even vehicles getting converted on hydrogen. So, there's going to be more cylinder required in both the places because, gas needs to be stored.
You have the technology or the capability for hydrogen?
Yeah, we have the capability. Yes, we do. We have the capability,
Okay.
Yeah.
Okay, great. And my last question is a question I ask every quarter. Now your net debt is down to, you know where I'm coming to, 110 odd crores with the prudent financial management of Sanjeev. Why won't you do a buyback? I mean, you're a 30+% ROCE business. You're trading at 7.5 times PE, cheap by any standards. I mean, yes, operations and, squeezing out efficiency in operations is important, but, the best companies out there, financial prudent management is equally important, right?
Yeah, of
and
course.
I think, think of it, investing your money in buying your share and like putting new capex in the ground. The ROI on your investment couple of years out is going to be fantastic. So why won't you do a buyback?
Yeah, no, we're definitely, definitely we're exploring all these. We're exploring all these things. We are continuously in touch with the board and who they feel that when this thing will be a right time to do these buyback and dividends and stuff like that. So we're definitely we are considering that even the promoters' debt that is being something that we have brought down. That was something that was investors didn't like that.
Fully repaid now?
It's almost 50% done. And maybe 50% in the next next quarter or next 2 quarters. So I think this is something that we are taking that initiative, and definitely I the way it is going, the things definitely dividends, buybacks will be something that the board will have to look at. I think going forward.
Yeah, my only simple suggestion would be, Puneet, it's obviously most attractive to do your buyback in difficult market conditions where you get a deal, right?
Right.
I mean, sure, you can do a buyback in the next year or two when you're completely debt-free, but then you're buying back at 300 rupees a share. When you're trading at sub 200, that is the time really to push the button. I'm sure Sanjeev will make sure, we're still within the norms of financial prudence in doing the buyback, but I would strongly encourage you to put this matter seriously in front of the board.
No. Definitely, you mentioned it before, so we're looking at it. We're definitely looking at it.
Super. All the very best.
Thank you so much. Thanks.
Thank you.
Thanks.
Bye.
Thank you. The next question is from the line of Radhika Kabra from Alpha Investments. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on good set of numbers.
Thank you.
I had 2 questions. First one being, as we said that we don't exist in the composite cylinder category. So don't we have revenue from cascade business of ours?
Yeah, we do. So cascade business, we do have revenue.
So how do we see composite cylinders as a competition in that particular segment? Because as we understand, the carrying capacity is almost double.
So what happens is that, that's why the growth of the composite cylinders are only in a segment where the gas transportation is required over a distance. So over a distance, definitely composite cylinders are making more economical sense. Cascades are, are like on the stations and short distances. Definitely steel cascades are making a lot more sense. So that kind of segment is just something that is, is coming up. So we don't see, because our segment is also, as more and more stations grow, the more and more steel cascades will be required on every station, because there is no point of putting a composite cascade on a station. Composites is only as a market for transportation over a long distance. So as the pipelines, as the infrastructure grows, the requirement for composite cascades will keep coming down, because you're connected everywhere and the distance of the travel is getting reduced. So definitely so we don't feel that our cascade business will get any kind of competition from the composite market, the composite cylinder cascades. Definitely there is a market, but it's quite small compared to the kind of cascades market that steel cylinder cascades have.
Okay, got it. So what percentage of our revenue basically comes from the cascade business of ours?
I think maybe 10 to 12% maybe, or I don't have the figures exactly. Yeah, could be that, yeah.
Okay. Another question being, is there what specific reason can we come down to for the degrowth that we saw in our UAE subsidiary?
Sorry, what? I'm sorry, I didn't get the question.
Like what probably are the reasons why are we seeing some reduction in sales in our UAE subsidiary, like the Dubai plant? Has there any volume degrowth or any of that sort happening?
The requirements for wherever we are selling. There has been some changes in the customer's requirement, in the sense the purchase requirement of the customer has changed. So there has been some delays of material leaving the plant. So that's the reason why we saw a little bit of a dip. But I don't see that should not be an issue going forward.
Okay. And how do we see what is happening at our US subsidiary? Like, are we seeing any demand coming in, any order book?
Yeah. See, the order book is very strong. Only thing is, because the US is a project-based business, so there'll always be a huge order book. Maybe $20, $30, $40 million order book is available. But only thing is that these orders should be executed on time, because again we are selling. Suppose you are selling cylinders in a ship. So, if the ship project is delayed, you get delayed, because you're a very small part of a very big project. So, that's what happened. That's what's been happening in the US business, that lots of projects that were going to happen have been delayed. So, order book is there, but delays. So, this is the reason why, we're not able to, the business is not able to come back to its original, position. But it's a matter of time, where things will become quite normal, and we should see the business will grow more, more systematically, and similar kind of quarters every month. Every quarter will be the similar kind of growth.
Got it. Also, one last question: can you give us the sales volume for full year and quarter 4?
Sales volume for the full year. Sales volume for the full. Sorry, you mean the numbers, the content, the cylinder numbers, or you want the
cylinder numbers?
So that we will not be able to share.
All right. No problem.
Thank you.
Thank you. Next question is from the line of Vivek from GS Investments. Please go ahead.
Yeah. Sir, am I audible?
Yeah, you can hear you.
First of all, congratulations for another set of good performance and coming back to margins in the operation. Keep up the good work, sir. And my question is regarding this any new customers you have added, and Maruti is the biggest customer for CNG, and I believe the waiting list of CNG vehicles is quite long, especially in the car. Is the situation same for the commercial vehicles also? Waiting list for CNG fitted PV cylinder, the small LCV is also quite large, and do we have the full pricing power over here in the commercial vehicles, sir? This is a big demand.
We I don't know. I can't say we have a power of pricing to the customer, but definitely we work with the customer as a partner, and so the pricing is done in a very fair manner, and we try to give the product to the customer as good quality and as we can, and of course the business is growing very fast, and we would like to be here with the customer on a long term basis. So nothing that we would like to do this kind of pricing this kind of strategy where we, can price up a product in such a way that, we look like, kind of dictating the situation.
Okay. And
but
sir,
volumes are growing, all segments, the CV segments everywhere, there's definitely, we're going to continue to see this growth on CNG.
Maruti, are you interacting with them? Because they are the biggest player in the car.
So we do not sell anything to Maruti, no.
Mm-hmm. Already your demand is being met from the other people.
Yes, of course. We are selling to other customers.
Mm-hmm. The second thing is, sir, this basically any progress on that indigenous raw material procurement from Maharashtra seamless, or still that Chinese import works out to be much more?
We have made some headway. We are, progress. We have made a lot of progress to localize the raw material. I think we have purchased some raw material also from Maharashtra seamless. So we are making headway there. Yes, definitely there is a good progress there.
And basically, I was reading somewhere that somewhere the indigenous gas production in India is nearly 70% post the production of Reliance KG Basin gas and coal bed methane, and hopefully with ONGC KG Basin also coming into the production soon. And there is one more opportunity because the LNG import prices have become very high.
Yes.
And the oil marketing companies are not increasing. They have frozen the price of diesel, petrol for a long time, but whereas the CNG is being increased on a daily basis, sir.
Correct.
And how is that price differential and sort of unit economics becoming weaker? And the one more thing was about I personally experienced this compressed biogas initiative in Western UP side. So I was pleasantly surprised by it that the compressed biogas is being made from the mud of a sugar mill. The technology is being supplied by Raj Industries. And with CBG, any idea you're having compressed biogas, how effective it can be and how useful, and also hydrogen also. So this is the any idea you can give on the opportunity size of CBG and indigenous production?
See, biogas definitely it is going to add to the growth of CNG.
Correct.
So as many biogas plants come up, but this is biogas also. It's a slow process, and for biogas also to produce CNG is being developed, but it is not being developed at that pace. It is because investments are required, and a lot of processes required for cleaning natural gas. Natural gas coming out of biogas directly cannot be used for CNG. It needs to be cleaned. There are a lot of processes that need to be done before you can use it. So it's happening, but it's happening at a slow pace, not at a very fast pace.
Okay, but that's okay. And what about the indigenous gas production, sir? Because that is also now becoming very important.
Indigenous gas production is something that the government is continuously trying to grow. Because, today we are importing a large quantity of LNG and, natural gas, wherever these resources are available. Definitely government is, trying to tap more and more, making larger investments now in gas. So that is an initiative that is always on a continuous basis, that all the gas companies are doing.
Okay, sir. And because that is that 70% figure, is it correct, sir, for the indigenous gas production? Because if that is the case, then we are in a comfortable situation versus the LNG prices, which are increasing drastically. And at least the indigenous gas production prices doesn't increase in that severe manner.
Yeah, but I think all gas companies want to make money. So they probably price their product even domestic price at international prices, So.
Yeah, domestic is still much cheaper than the international prices.
Yeah. But again, these are products that are anyway, priced at international level. And again, these are government policy matters. So again, we don't have much control or say in these matters when it comes to pricing of the gas.
So one more thing, last thing which I wanted to ask, this might not concern you directly, but see, ours is one of the best performing companies, quality small cap companies, wherein we are the leader of the segment, and the segment itself is growing very fast of CNG cylinders and the entire ecosystem is there. But unfortunately, very, very little institutional interest is there. No research report is coming in. And secondly, that this 5% limit is a very big irritant, sir. Actually, lots of short-term players, traders get into it. manipulate it to their whims and fancies. But something can be at least made a representation to the required authorities that this is sort of playing havoc with the long-time investor leave aside, but other people who are simply not touching our script at all, sir. So, that's not controlling directly, but at least some action can be taken, sir.
Well, we will definitely write to the exchange to, on this 5% barrier and see if they are, what is the reason why this has been happening.
Correct.
Yeah.
That will be really useful, sir. And any analyst meet and research report, you please do let us know as already required by SEBI and exchanges now. But one of the best performance is coming in at very attractive price potential is there, but somehow the price discovery is not happening, sir. Keep up the good work, sir. Keep up the good work.
Thank you.
Thanks a lot. Thank you.
Thank you. Next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity and congratulations on good set of numbers.
Thank you.
This 10 to 15% volume growth you mentioned as a guidance, is it only for the domestic side you are saying?
Yes.
Okay, and you will also focus on higher realization products. So can we safely say the revenue growth can be higher than 15%?
Yes.
And sir, and then UAE and US also, you are expecting good growth overall. So means at Concall level, the overall growth should be much stronger overall.
Yes,
Am
of
I
course.
correct?
Definitely.
Okay, sir. And sir, out of this 35 crore brownfield capex, how much is spent as of now?
All spent.
All is spent. Okay, sir. That's it from my side. Thank you very much.
Thank you. Next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Hi, good afternoon and congrats for a good set of numbers.
Thank you, sir.
So my first question was regarding Dubai.
Yeah.
So what is the peak revenue we can do, or if you can tell us what was the utilization in FY22 in terms of the facility?
So Dubai, I think peak revenue is 250 is what we can do. And what has been the peak revenue? You're saying the utilization.
I'm saying what was utilization in FY22, or else if you can tell us what is the best revenue when we for it full capacity can we do from the Dubai?
250 has been the best revenue, or 220?
Which is what we already done in FY22, right? 240 crores.
We've done 240, no? This year?
It should be around 40.
Yeah. So we already...
So does it mean that the Dubai operations will not see any further growth from here unless we add capacity? Because you said that we are...
So maximum we can, I think there is still some room of say 20% from here.
20. Okay. So second question was on US. You mentioned that order book is strong, but the numbers are getting impacted because of offtake. But when we see the quarterly numbers, last 4 quarters, your revenues are in the range of 50 crores, but your profits are very volatile. Q1 you did a profit of 14 crores, then became 2 crores, and then this quarter there's a loss of 7 crores. So while the revenue has remained the same, the profits just keep swinging from one end to another, and hence it becomes very difficult to get a hang and also get confidence on this turnaround or maybe the growth on the US business. Can you comment on that?
In this, the numbers actually they vary because it's project based. Maybe in some project we have higher margins, in some project we have lower. So whatever finally gets supplied, that's the value which will come into play.
So how should we look at the margin of US going by the current
averages? I mean, averages, obviously, it is there. If you look at the average, we are doing quite well. And future also, we believe that they'll do better than this.
So if you see the last 10 years, sir, the best we have done is 190 crores of revenue and 5-6% EBITDA margin in US. That is the best we have done in last 10 years, including the current year. So do you think that we can further improve, or, last 10 years this has been the ceiling, so we somewhere stagnated?
I mean, see, the borrowings have reduced substantially, so there'll be a substantial saving on the interest cost. So obviously they'll do better.
We are talking of 7% EBITDA before interest.
Oh, before interest?
It is in the range of 5 to 6%.
Before interest, they are averaging on this basis only.
You expect any improvement?
If they have a higher volume growth, they'll have better EBITDA.
Okay. My next question was, sir, on the India operations. Can you give us a sense on the CNG side, what was the breakup between passenger and cargo?
Sorry?
Passenger
and cargo. I think passenger should be much more.
But, from whatever...
the commercial segment will be larger. Maybe 65%, maybe commercial.
And how was this ratio 2-3 years back? Because from what we are hearing from the OEM commentary, they were indicating that...
it's the same. It's been the same. Commercial has always been much stronger from our business.
Okay, because when we hear the commentary of the auto OEMs, they have been indicating that cargo is seeing significant growth in terms of CNG pickup. And that's
right. Yeah.
But you are witnessing similar growth both in passenger and cargo, no major difference.
No, cargo is growing much faster and is going to grow much faster also for us. For our business, commercial segment, passenger is still, like I said, about 35%.
Sure. And a couple of quarters back, you had indicated that you were in some talks with Maruti and you could see some progress or success. But in one of the previous questions, you mentioned that as of now, you're not looking at any major business. So is it that because we are running short of capacity and hence we are not chasing Maruti, or is it that we did not have major progress and hence as of now we have dropped it?
These projects take a long time, so discussions go on, but there is no, till we don't have a clear, like a SOP or something given from them, till then we cannot give a clear idea that when we will be able to start supplying. So discussions go on, but we don't have a SOP in hand to supply to them at the moment.
Sure. And my last question is on the capital allocation and the buyback, and that was raised to these participants. Sir, one of the reasons, that comes across in discussions for our low valuation is that now that we are almost debt-free, but there's no clear, guidance from the company that, maybe in the this year when we become completely debt-free, in the next 3-4 years, what is going to be the capital allocation policy? In the sense, once we become debt-free, will we do buyback and dividend, or will continue to keep cash, or will continue to just invest in capex? I think if we can come out with that proper policy, in the next 3-4 years, what is going to be our capital allocation?
You see, as we also continue to get some clarity on our expansion, so as the clarity on the cash flow, there will be, we are here to reward the shareholders at the end of the day, and everybody here, the board and, the management, everybody thinks the same way. So I think definitely there is, if there is cash available, definitely there will be, ideas to give out to the shareholders, reward the shareholders.
Yeah, but my humble suggestion would be, if you can give without any very specific number per se, but if you can give some broader guideline to investors and shareholders, how do you plan to use the cash in the next 3-4 years? I think that will be very helpful.
No, I think it's a good idea. We'll definitely, if you're allowed to do it, we'll definitely try to do that.
Sure. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Chetan Palke, Martha Invesco Research. Please go ahead.
Yeah, thank you for the opportunity. Sir, would like to have some idea on the capacities at present. So, as I understand, after this debottlenecking or brownfield expansion, our capacity has gone to 10 lakh cylinders. Is that correct?
Correct.
And what was the utilization for the full year?
90%.
90%.
Last year. You're saying last year, right? Yeah.
So roughly, let's say 9 lakh cylinders. Can that be the sales volume for the year?
I don't have the numbers with me here, but yeah, definitely it's yeah.
Okay. Because in our annual report, we do disclose our standalone and consolidated production and sales volume. So I was just wondering if I can get the sales volume number for this year or quarter 4.
I don't have them here, but definitely, we will, if they're being disclosed, then we're definitely going to give it to you.
Okay. And the remaining capacity expansion post which we will go to 1.4 million cylinders, that will get completed by Q2, Q3 of FY23?
FY24.
FY24. So another 1.5 years.
Yeah.
Okay. And sir, I think compared to 2-3 years back, our working capital days have improved substantially.
Right.
Currently, we stand somewhere close to, let's say, 170 odd days. So can we expect some further improvement on this front and some more capital getting released via better working capital management?
Yeah, sure. But as we run a business, it's a little different, to kind of, time everything. But definitely we are working on all aspects to improve all, purchase locally, get better terms from suppliers, better delivery periods, But there's a lot of uncertainty in the environment as per supplies and disruption due to imports. So, sometimes things do get a little disturbed, but definitely this is something that we have done in the past and we continue to focus on.
Okay, so is it fair to assume that we won't be crossing 180 days of working capital in going forward? I mean, it will remain in this range.
I don't think so. No. We should not be.
Okay. And just one last question, sir. I mean, on Type 4 cylinders, one of our competitor was talking about a payback of 6 to 7 months because the carrying capacity is double. As you were rightly pointing out that it is not just the cascade opportunity is only for the transportation.
Right.
The argument that is being made is just on the lines of, just because of the carrying capacity being double, that is much faster. That is one. And second, recently some of our competitors have also got a piece of approval for the onboard cylinders.
Correct.
So they might get into trucks and CNG buses segment as well. And they are trying to announce some capex on that particular segment as well. How do you see this landscape?
The competition has approval, it's not that, they don't have approval. So people have had approvals in the past also, So it's not that they don't have approval. Again, coming back to the Type 4, like I said, Type 4 segment is mainly for gas transportation. But suppose you want to just keep the cascade on the station, which is not going to get transported. So that is not, it's not economical to have a very expensive product on the station which is not going to move. So definitely it is very good to have, where you said 6 to 7 months of payback is only when you are transporting gas over a big distance. But when you're storing them in a specific space on the station, and when the distance is, like suppose all the cascades probably transporting within Mumbai, they would not be on a composite because it doesn't make any sense because the distances are very short. Or you go to a smaller city, in small cities again the transportation becomes less and everything becomes less. So there again they become uneconomical. But they become economical in an area where the stations are very far away. But as the network goes on growing, see every day in India the network of pipelines are growing very, very fast. So this kind of requirements will definitely.
Puneet. No, I'm saying, what if the carrying capacity is double? Even then, it doesn't make a difference, even if it's an expensive equipment.
No. It doesn't make. Yes, it doesn't, because the customer is benefited by it. Obviously, like I said, if you're traveling over a distance, instead of carrying 2 trucks, you're carrying 1 truck. Definitely, it is an advantage to the customer.
Got it. Just one last question. Any comments on our dividend payout policy going forward? I know you have made a couple of references regarding our capital going forward. But since, with respect to dividend, it is only 3% of PAT at this point of time. Can you see
I will definitely convey to the board your comments. On this, definitely. I think, see, it's moving in a positive direction. I think it's better than what we did previously, and hopefully, if things become like this, we continue to be more positive on the dividend front.
So the line for the participant dropped. We move to the next question. Next question is from the line of Sandeep Agarwal from Naredi Investments. Please go ahead.
Hello.
Yes.
Yeah. Thank you, sir. So my question is regarding our Kandla plant location. Have we used this facility for export purpose, or is this any specific advantage of this location?
We have a facility, we are using it, Yeah.
Hello?
Yeah, we have the plant there. We are, And near the port. See, the advantage for the location, it is near the port. All the raw materials are being imported. So definitely being near the port helps.
Okay. There is no export from this plant.
Yeah, we do export something. We do export.
Okay. But not material, no?
On material? Sorry?
What's the percentage of export?
No, I think
this plant?
Very, very less. Yeah, it's very, very less right now. But, because the domestic market is growing so fast, we do not have the capacity allocated for export because domestic, market has been growing. And you have known, in the last 2 years, because of COVID also, lots of the cylinders manufactured were for medical oxygen requirements. So, the capacity had to be dedicated as per the government also that all this capacity need to be dedicated for supply in India only. Am I audible? Can you hear me? Hello?
So my next question is regarding our net current asset. Currently it is at 603 crore. So it is this is a new normal inventory, current asset level, or we have any target to reduce it?
Definitely, this will get consumed in the period, yeah.
And there is any specific target regarding the current asset level?
Yeah, I think
you can coming at optimum levels there. We are actually quite good in the current scenario too. If you compare the figures, they are all lower as in view of the turnover.
Okay, thank you.
Thank you. And now hand the conference over to the management for closing comments. Sir, would you like to make any closing comments?
Yeah. Okay. Reading the call already. I don't know if it's done yet.
Sir, would you like to make any closing comments?
Yeah, sure. Thank you, yeah. Thank you once again for your interest and support. We will continue to stay engaged. Please be in touch with our investor relation team, CDR India, for any further details or discussion. Look forward to interacting with you soon. Thank you, yeah.
Thank you very much. On behalf of Everest Kanto Cylinder Limited,